Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 15th of June 2015. Please make sure that you have read and understood these disclaimers before we take a look at the markets. Let's take a look also at the DAX. Last week I spoke about the DAX, so we don't need to dwell on it too much. Just interesting to see what it's telling us in terms of whether the 40-week or other cycle trough has formed, in terms of the trough that formed last week. Here you can see in this analysis in the DAX, we're expecting, in fact, an 80-day cycle trough. There's the 80-day circle and whiskers, very displaced, as you can see. What I call a staggered nest of lows. It indicates that there's something in the analysis that maybe isn't quite right, but we're getting a lot of sort of strong variations in the cycle wavelengths. So that's not a perfect analysis by any means, but we were expecting an A category interaction. Can you see price didn't in fact touch the level of the FLD? Let's take a look at the other analysis in the DAX, and I presented both of them last week. And now this analysis in the DAX has the 80-day cycle trough over here on the 7th of May, similar to our analyses in the US stock markets. And so this was expecting a 40-day cycle trough to occur last week. There's the trough, which was potentially the 40-day cycle trough. Price came up to the FLD, crossed it, and then came down again. We have a little bit of a spike, but as you can see, price went up above the level of the spike. That hardly qualifies as a spike. Looking at it, I probably wouldn't even worry about it. So price crossed up above the FLD and then dropped down below it. So this raises a really interesting question. In last week's video, I mentioned this is either a 40-day trough that we're expecting a bounce out of, or it is an 80-day cycle trough that we're expecting the bounce out of. Both of them present long trading opportunities. Now, in the two DAX charts, and in fact in most of the charts we've looked at today, the FLD was crossed on one of those charts, but it wasn't on the other. And that is another very important detail of the FLD trading strategy. When you have two analyses, both of which are possible, and I've been talking about these two analyses for several weeks now. Both of them have been shaping up and we've been tracking them. Neither of them has been invalidated yet. Both of them are still valid analyses. When you have two valid analyses and you're making trading decisions, which one do you use, or how do you make trading decisions when you have two valid analyses? Now, there are various approaches, but the approach that I recommend is that you look at the FLD level on both of these analyses and you choose the safest one. In other words, the one that is furthest away from price, because of the kind of situation that does sometimes happen, as we saw last week. So here is the FLD level in the DAX for Thursday of last week, when potentially we might have been stopped into this trade. That was at a level of about 11,376. Let's have a look at the FLD level on the other analysis. Now remember, we didn't know which of these analyses was the correct analysis. On Thursday, the FLD is a little bit higher at a level of 11,472. So in terms of trading the DAX, I have two possible analyses, and the sensible thing to do is to not set your entry level at the level of the lower FLD, because you might accidentally get stopped into this trade, and then as you can see, price goes up and then drops down again, and you're saying, what happened to my FLD cross? Well, on our other analysis, which is also a very valid, very possible analysis, price didn't even touch the FLD. So that's a really important thing to bear in mind when you have two very possible, very viable analyses. What do you do when you're going to trade them? My recommendation is that you choose the FLD level which is further away from price. That way you don't get stopped accidentally into the trade. So if you had not done that and had chosen this FLD, you would have been stopped into a trade which so far would be a losing trade. Is it Definitely the wrong trade? No, not necessarily. It might still turn into a winning trade, but it's a difficult trade to be doing or to be in emotionally. Here is the potential 40-day cycle trough, and it's quite possible that price bounced up to the FLD, is now coming down below it, and is going to continue up above it. That is quite possible. The fact that price fell on Friday and has fallen so far on Monday doesn't invalidate that as a trough yet, but it's certainly it would certainly be a nerve-wracking trade to be in. As a matter of interest, let's just go back to the S&P 500 and take a look at. I mentioned earlier. Let me just zoom in here a little bit. I mentioned earlier that the fact that price has come so far down does not invalidate the fact that this is a trough. That's a really big retracement. But recently the markets have been doing that. They've been doing it time and time again. We've been seeing really big retracements. You know, here's another one, the bounce out of this trough, which was possibly the 40-day cycle trough, also showed us a really big retracement. Now, when you're talking about oops, that's a really skew line. When you're talking about retracements and degree of retracements, I always think of Fibonacci. Fibonacci levels are very useful levels to use to measure retracements. I don't trade entirely on the basis of them. I incorporate them into my trading. I think they're very useful levels, and I know we have many Sentient Trader users who use Fibonacci levels. But let's just take a look at those retracement levels. Let's just work out some price levels here. That low price is 2056.75. This high price is 2113.25. That's the winner. So that's from 2056 to 2113. That's 56.5 points. That move up. And then the retracement was down to this low price over here, which is 2079, which is a retracement of 34.25 points. Let me just write those numbers down here. From that low up to this high, that is a move of 56.5 points. And then this retracement over here is a move of 34, or a retracement of 34.25. Now, what is that as a percentage? If we work that out, it's about 61%. Could use a calculator and get it absolutely right, but it's about 61%. And of course, a very well-known Fibonacci level is 61.8%. So that's clearly a good Fibonacci retracement of 61.8%. So we're seeing retracements of 61.8%. And so what about this retracement over here? It's been a big retracement, no question about it. Has it been an impossibly big retracement? Let's just get those levels as well. That's the low of 2068.5, and that high on Thursday was 2114.25. So that's 45.75 points. And then what's this low so far in before hours trading? That low is at 2080. That's interesting. Also 34.25 points. Very interesting. So I find numbers particularly fascinating. So we also had a retracement of 34.25 points. So here we had a retracement of 34.25 points. And here we had a retracement of 34.25 points. Probably purely coincidental, but anyway. Our move up here was 45.75 points. So what is that as a percentage? Let's see, it's about 75%. Now, there isn't really a Fibonacci level of 75%. The Fibonacci levels are 23.6%, 50%, 61.8%. You don't really get a 75%. Some people speak about 75% as being an inverse of the 23.6%. The true inverse is 76.4%. but that's debatable as to whether it is a true Fibonacci retracement. Anyway, my point is that's a 75% retracement. It's a big retracement, but we have been seeing big retracements. It's not an impossible retracement. I find it quite interesting that you get 34.25 and 34.25, just perhaps an interesting coincidence. But this trough has not been invalidated. Of course, if price falls yet further today and through the week, then of course that trough will be invalidated and this would have been a waste of time. But my point is that we might still witness a bounce out of the trough that formed last week. Now, we looked at the FTSE last week as well. Let's just quickly follow up with what happened in the FTSE. The FTSE, as I mentioned last week, is really a little bit tricky in my opinion. You're getting a lot of volatility. This is a very bad data sequence. There's quite a lot of patchy data. It's because the FTSE doesn't trade 24 hours a day, so we're seeing more gaps in the data and so on, but nevertheless it's looking really quite volatile. This is the analysis here, which was indicating a trough of 80-day magnitude, and this trough is looking late. Of course we could start pinning troughs. Maybe that should be pinned to over there, and we could fiddle around with this analysis a bit. The important thing is that the FTSE came nowhere near the level of the FLD last week. There's the FLD, you can see it didn't come anywhere near it, so that looks very much more like a G and H, and I wouldn't be surprised to see a lower trough forming over here. As a matter of interest, in terms of speaking of the overall bearishness of the market increasing, I think we can see that happening here in the FTSE. So far, we have a lower peak over there, indicating slight movement towards the bearish side. Very subtle, but it is there. We're beginning to see some bearish cracks. I thought I'd also very quickly this week take a look at the CAC-40, and that's actually also an interesting chart that we can chat about in a moment. Here's the CAC-40, the French market. You can see that according to this analysis in the CAC-40, we were expecting a 40-day cycle trough to form last week, and sure enough, a nice trough did form, of course. Price came all the way up to the FLD. Here you see another example in the CAC-40 of a really typical FLD spike. Price crossed the level of the FLD for that bar, which was a Thursday. It didn't exceed the level of the FLD where it was at on Friday, as you can see. Perhaps I should zoom in a little bit and you can see this more clearly. It's a really perfect example of an FLD spike. I'll leave the FLD unselected. You can see it in a bit more detail. But here you can see price crossed the FLD on the Thursday. It didn't exceed the level of the spike on the Friday. You can see it missed that level, and then it came down again and has remained below the FLD. But we are still expecting that 40-day cycle trough over there, and it is by no means impossible that price could be going to do something like that, and so we'll still get the bounce out of the 40-day cycle trough. But the bottom line is, it looks as if though the trough that we were expecting formed last week. It is possible that it is still going to form in the week ahead. But the important thing is that it has been very difficult to get into this trade because of the particular formation of the FLD and price. Sometimes this happens. It's like getting bad weather. The conditions aren't perfect. We had a long trading opportunity, but it was a very difficult entry, and so we haven't successfully made an entry yet.